Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's episode is brought to you by ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307 264 9441 or by email at ian@arcsgo.com and make sure to tell him that Commodity Culture sent you. And today's guest has a wealth of experience in the mining industry and is an expert on geopolitics, China, and the commodities sector, and the founder of Simon Hunt Strategic Services. It's Simon Hunt. Welcome to the show.
Good afternoon.
Well, I want to get started with a broad overview from your perspective of the global economy and financial markets. You could take this any direction you want to go, geopolitics. What are the main themes and trends you're watching right now that you think more investors should be paying attention to?
Big question, and probably the most important one. I think there are two themes we need to be watching very carefully. The first is the likelihood that America and most of the rest of the world will be in recession in the second half of this year. The second is that there's the probability that wars in Europe will escalate, wars in the Middle East will escalate, that there is a risk, and I emphasize risk, that a cyber attack will shut down bank computers and possibly also airline and electricity grid computers. The cyber attack could actually be undertaken by the G7 countries' intelligence services, obviously to accuse Russia for doing it, with the objective of when the system is reopened, that they introduce central bank digital currencies. What does this mean for markets? First of all, markets have been assuming that everything is hunky-dory in the world, that valuations are being priced for a stable world, and that a shock will come unexpectedly to most market participants. So that we will see by the end of this year or early next year, to take the S&P as an example, a 40-odd% correction in the S&P index down to 3,000. Most other markets will follow suit. It means also that inflation will remain sticky, putting it politely, and that the Fed will be reluctant to lower interest rates this year. In fact, there's probably a debate going on within policymakers in Washington. Do we defend the dollar or do we defend the treasury markets? Obviously, those who voice for defending the dollar would be the neocons, since it would be part of their posturing to retain America's hegemony. So the likelihood is that that the dollar will remain at around current levels before declining sharply next year. I think the big risk to markets is that if, as I think very likely, that wars escalate, then Japan will be wanting to bring back most of its foreign investments, which at the end of last year totaled something like 4 trillion. That would have massive implications for financial markets, since it would be the end of the carry trade. So really what I'm saying is that the world is sitting on a precipice, that there will be shocks coming in the second half of the year, which will impact financial markets, commodity markets, and the way you and I spend our money.
Very interesting. I think a lot of people have kind of gotten complacent since all the restrictions from the pandemic were removed. People are thinking, well, now we're back to the world is normal. And I think as you're saying, markets are reflecting that sort of attitude. You meant that's very interesting that you mentioned the potential for a cyber attack, particularly on the banking sector, to then potentially introduce a CBDC. Is Because of that risk, does that make it more important for people to hold wealth outside of the banking system in the form of whether that be gold or silver, cash under the mattress? How can people kind of mitigate that potential risk? What are your thoughts?
Exactly what you said. To hold assets outside the banking system, to hold physical assets like precious metals, gold in particular, because I think within a very few years, probably within 3 years, within the BRICS group of nations, gold will be back in the monetary system. But I think the other very important asset that people should hold, particularly households, is food. Food is going to be in short supply. Somebody, for instance, told me that one of the burger chain restaurants in America is no longer selling beef burgers because they have no beef, chicken burgers. So it's very important to hold enough food to last not just for a couple of weeks, but for a year or so. I mean, I have advised my son's family and my daughter's family to do likewise. The food is going to be in short supply, one, because of the wars, two, because of disruptions to supply chains. I mean, even here in Dubai, I find that my usual red wine, the hotel's out of stock. Which doesn't mean the hotel's out of stock, it's their supplier is out of stock. So already, if you look around, there are pockets of short supplies. So just wait until we have the real shock. It's going to be nasty. So having enough food will be your savior.
Yeah, that's a very good point, and one that I think most people don't consider. I want to shift to the copper sector right now because you research the global economy and how it impacts the copper market. Talk to us about your main findings there when it comes to copper.
Not what you hear or mostly read from investment banks, I have to say. But I've been involved in the copper industry ever since a child, when my father was involved in it in northern Rhodesia, now Zambia. And I worked for two major copper companies. My take is this. Physical consumption is weak globally, and it's particularly weak in China. There is plenty of copper. Most of it is being held outside the exchanges. But even in China, on the Shanghai Futures Exchange, you've got 300,000 tons of copper. There will probably be a small surplus this year. Next year, so I should come back to this year. What we've seen in this massive spike in prices was funds and banks going very long of copper futures, in the process squeezing people on COMEX. Metal is being diverted to COMEX, which will start arriving in COMEX warehouses early next month. The fact that copper consumption will get even weaker as the world evolves into recession in the second half of this year, so that consumption will be weaker than the possibility of a fall in production. There's the risk of at least one big strike in Chile, and the potential for a strike in Zambia and DRC because of very high inflation, and workers will be demanding a big increase in wages. So I think that by early next year, copper prices will fall to below $7,000 from the current, wherever we are, 10,500, something like that. But next year is going to be very interesting. One, the dollar will fall sharply because the Fed will be unleashing, with a new government, will be unleashing a huge monetary and fiscal stimulus. Two, there will be a recovery in physical consumption. China will be recovering quite sharply by the end of this year. And the ECB will also be stimulating. So we see, first of all, a recovery in actual physical consumption. Secondly, the dollar falling, inflation rising, manufacturing will add to inventory of physical copper, semis, products, etc., right through the whole manufacturing chain. So let's say that real physical consumption rises by 4% next year, which I think is probable. You probably need to add on another 2 percentage points to allow for manufacturing restocking. So you get a 6% increase in physical consumption. Add to that, you'll have the funds going crazy again, as they always do when the dollar falls and inflation rises. They look for their hedges, one of which is copper. Production will probably be rising a tad, but not dramatically. So on our numbers, we look for a deficit next year, a proper deficit, not one that is put out by many of the investment banks this year, a real deficit of around 900,000 tons. So prices go from a low of, say, 7,000 tons by early next year to around 14,000 tons, or doubling in price when we're 25, 26, in the early months of 27. That may appear sharp, but go back to 78, 79. In the pace of 12 months, copper prices rose by, I think it was 75%. What happens then? The problem is that with high inflation, global inflation probably around 15%, and US inflation around 13%, what do the bond vigilantes do? They don't like it. So you get take 10-year treasuries, yields will be rising over 10%, and global long-term bonds equally, if not more. What does that do to a highly indebted system? It's going to crash it. So all asset prices, other than food, precious metals, will collapse. I won't give you numbers for where we see the S&P, because you need a big dose of whiskey. And you will see copper prices and other base metal prices at levels that are outside people's comprehension. So we then move into a completely different era, which will be not just one of financial panic, but real wars, both within countries and between countries. And I think that's going to be 5 to 7 years of very nasty and difficult times, at the end of which the world will be restructured. It will be no longer, will it be an American hegemony? It will be a multilateral world led by China and Russia. And we will get peace. Inflation will have been killed. The way forward won't be debt, it will be equity. And we enter the next long-term global 40-year period of growth, back to what the average we've seen since 1900 of GDP averaging 4% a year. The problem then is what currency will copper and other base metals be priced in? If you look back, the profits that copper producers have made since 1980 are illusionary, because a $1980 today is worth 25 cents. Slowly, I think developing countries are realizing that linking prices to dollars is not the way forward. So I think the way forward, within 5 years, if not within 3 years, BRICS members won't be 10, they'll be 40. And those additional members will include a number of base metal producing countries. So you go back to old Connolly's famous words: commodities are our assets, but your problem. So that really comes back to what sort of currency should we expect from the BRICS? The first step is obviously going to be using blockchain technology and others to create a trade and an investment platform that obviates the need for the dollar, i.e. local currencies. The stage will come quite soon when China will announce our currency is backed by the gold which our citizens hold, which, based on numbers that friends of mine have done, is about 23,000 tons today, and in which, in recent months, China's government has wanted its citizens to increase their gold holdings by the PBOC setting up platforms that households can buy gold physically off the Shanghai Gold Exchange from their bank accounts, even on a monthly payment system. So when that happens, I think Russia will follow suit and say the ruble is backed by the gold that we own, which is over 12,000 tons. and increasing by 300 to 400 tons a year. So the next stage, and I don't have details, but one can suspect that BRICS will develop their currency platform linked to gold. Just as quietly, Russia is linking the oil price to ounces of gold. That's the way forward.
I do want to hone in on China for a moment here, an area that you have a lot of experience, and you've just laid out a very interesting scenario there. However, we hear a lot of conflicting reports from various media sources when it comes to China. Some of them say the economy is in shambles, their demographic data is looking really bad for the future, and they're on the verge of collapse. Obviously, that's kind of the Western mainstream media narrative. You have people
Very
on the other
much so.
side. Yeah, you have people on the other side saying that actually China is one of the next global superpowers. You mentioned in the new world forward that it will be Russia and China that will lead the way, and China is obviously a commodity powerhouse. So I'm wondering how you could maybe, if you could maybe shed some more light on China's role in the years ahead and the strength that you see coming from China right now.
China's economy is obviously in a transitioning phase, transiting from an economy driven by real estate towards economy now being driven by manufacturing. And China is not going to reverse course and allow so much of their investment to be channeled into speculation, whether it be property or the stock market. They want the stock market to be driven by fundamentals. And in fact, just the other day, they have announced a huge crackdown on financial speculation and the financial markets. We don't quite know yet what's going to emerge, but clearly there's a big crackdown coming. So China is having to, as it transits to manufacturing, at the same time, it understands what's happening in the big wide world and is having to make contingency plans in the event of war. I mean, there are some factory sources tell me that they are having to allocate floor space to producing goods for the PLA. And you can see they're preparing for war by cleaning up the PLA. Whether war materializes, it doesn't matter. They're making the preparations. I think a second factor is they understand that the debt issues that all G7 countries have got themselves into and don't want to get their own economy into. It's interesting that as a percentage of GDP, central government and local government debt is 55% of GDP. The big numbers are corporate debt, 120% plus, household debt, which is mostly mortgages, 61%. And then you've got the off-balance sheet local government debt of over 60 trillion RMB, approximately 10 trillion US dollars. So what they are probably going to do, or will announce after the third plenum in July, is a very specific designated infrastructure program to help to help local governments get out of their debt mess and to give them the means of actually releasing projects. I mean, for instance, I'm reliably told local governments in northern China are bust and cannot issue any projects. And for copper, I'm told there is no consumption is flat, period, if not falling in northern China, which is about 30% of China's copper consumption. So what this will do will be lay the foundations for a cyclical recovery. And I emphasize cyclical. And that will gather pace in the second half of this year and obviously into 2025, which will then coincide with what the rest of the world is doing. I think the big theme in China is that they are very long-term planners. And Xi was brought in to clean up the speculative mess caused by his predecessors and to strengthen the party. So as part of that, China is bringing everything back into its own arms, i.e. the SOEs, at the expense of the private sector. And you can hear chatter about how in different sectors, private companies are falling by the wayside. So once they've cleaned up the mess and got their arms around everything, then I think you will find in maybe 10 years' time, 15 years' time, that it's back to releasing the energy of the private sector. So that, I think, is the big picture.
Very well said. Fascinating breakdown. I'm wondering what your thoughts are on oil markets at the moment and where you see energy headed. As we speak today, WTI crude at $80 a barrel again. There's been a lot of talk out there from various politicians about the so-called green energy revolution. As a lot of people I've spoken to point out, it's not sustainable to be building solar panels and windmills everywhere, and that we're going to need oil for a very long time to come. I'm wondering what your thoughts are on the oil market. Is it bullish over the long run in your view?
Well, first of all, I think the green energy is a political ploy. It's completely unsustainable. In fact, the CEO of Exxon, at a meeting in November last year, an APEC meeting, I think it was, said it very clearly. We invest in fossil fuels. We do not invest in renewables, but we do invest in technology that reduces emissions. That was brilliant. So what does it mean for oil? I think there is a risk between now and early next year of oil falling quite sharply because of weak demand, recession. But from the early months of next year, we see oil rising very sharply indeed. The one thing that we have to watch, which will cause my forecast of oil weakening in the second half of this year to be wrong, is that should Israel / America launch a specific attack on Iran, on specific infrastructure, Iran has made preparations by putting explosives on the floor bed of the Hormuz Straits, which at the flick of a switch, they can shut the whole Hormuz Straits down. But longer term, oil is here, and we will see. Without the straits being shut down, I think oil by the end of next year will be 150, something like that.
I want to circle back to your discussion of the future ahead, a new world where equity instead of debt is driving the economy. And you said it's led by Russia and China and the BRICS nations as well. How do you think about different political leadership around the world in the sense that for most people who subscribe to the mainstream Western view, they would consider that some kind of catastrophe, like, oh my God, if Russia and China are in charge, they're just going to enslave the world. It's going to be a dystopia across the planet. I mean, we're seeing Western governments turn more and more authoritarian, but it feels like a lot of the population in those countries is refusing to wake up to that fact because I think it's just too terrifying to consider. Were the democracies, were the people that tell the rest of the world how to be free, and yet now here's what's happening in places like Canada, where I'm from, where they freeze people's bank accounts. They're trying to police hate speech now. Scotland, UK, the list goes on and on. Um, how do you think about that in terms of the Chinese are in control, the Russians are in control? Is it the case of the cleanest dirty shirt in the laundry bin? I think at the end of the day, the vast majority of politicians have some element of sociopathy to their makeup. They crave power. Is it a matter of just like everybody's a bad guy, but the one that causes the least damage would be best to be in charge? Or is it not like that? Have we been misled at large about Russia and China? And are they actually benevolent governments?
I think you've summed it up in your last sentence. I think that the media, as you know, is controlled, and part of that control is to make people believe that Russia and China are bad boys. They are full-blooded communists, no free speech, etc., etc., etc. Whereas, yes, China in particular is an authoritarian government, but it's a pragmatic one. The second point I'd make is they won't control the world. It's a multilateral world in which the members of BRICS all have to agree. They have big arguments. So it'll be a different world structure, but one that will not be dominated by any one country that uses any excuse to attack, invade, issue sanctions against any other country, where really has no rightful reason to do that. Why is it causing disturbances in places like Georgia, even in your country? We have to control the world. You have to do what we tell you to do. Whereas I think that in the BRICS world, that won't be the case. You get on with your life in your own country, whether we like it or not.
Interesting. Well, Simon, this has been a fantastic conversation. Thank you so much for coming on the show. Before I do let you go, tell us about Simon Hunt Strategic Services, what it is you do there, and where people can find that.
You can go on to simon-hunt.com, where you'll find information about what we do and how you can subscribe to our services.
Great. Well, I'll put a link to that in the description below so people can check that out. Thank you once again, Simon, for coming on and sharing your knowledge with the audience.
Good. Enjoyed it. Thank you for having me.
And thank you for joining us today. As a reminder, this episode is brought to you by ARC Silver Gold Osmium. Go to arcsgo.com for all of your precious metals needs and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.